Tesla just made an unprecedented move, but let's start with a smart move first. Dave Lee says that this is a smart move by Tesla. Tesla is currently lending Cybertrucks to YouTube and other influencers with the agreement to not share details ahead of the November 30th launch date and to film mostly behind closed doors, just like with the refresh Model 3. Highland, a massive amount of videos will be released the same day as the delivery event. YouTube will be overwhelmed with Cybertruck details instantly. I like that. That's a good idea. That's a good move by Tesla. And SpaceX released a video of the Cybertruck hauling one of their rocket engines finally. We saw pictures before, but now we have an official video. The Cybertruck is coming. There's also a video of a Cybertruck arriving at one of Tesla's locations here. Why do you think it was seen there? It's because the deliveries are actually going to start right after the delivery event. That's what I personally think. And a group of people has been seen filming the Cybertruck. So I think the rumor is almost certainly true that there will be a lot of videos coming out immediately when the delivery event happens. Well, this is unprecedented. Tesla has quietly started listing new vehicles on cars.com. Tesla has never sold new cars outside of its main website, so that's why it's a bit unusual. Supposedly, cars.com is really popular. It gets 15.5 million unique site visitors each month. But Elon says that it is the first time he has heard about this, and it seems odd to him. So even though, as I am recording, Tesla's vehicles are on the website, they may be removed if Elon orders his management to do so. But generally, the reaction that I have seen from Tesla stock investors has been nothing but pretty much positive. It's basically a form of advertising. Finally, we got production numbers from Giga Shanghai, and that number stands at 83,500, which is the highest since April, so I say it's pretty good news. The ramp of the refresh Model 3 and the slightly updated Model Y has been incredibly smooth, and chances are that the number this month and in December is going to be even higher. There's something strange going on here. Tesla is offering 6 months of free supercharging on new Model 3 and Y orders. However, you need to place your order with a referral code, so you can't just go to Tesla's website and place an order. No, you need to have a friend. And then, of course, there is a time limit. You have to take delivery by December 31st, which is pretty normal and expected. But here is the really weird part. Tesla has actually deleted the tweet announcing the deal, so we are not sure if it was just a mistake or posted too early or if it was removed for some other reason. This was the original tweet, and an offer like this, I think, would increase the demand by a little bit. It doesn't really cost all that much for Tesla, but some people are certainly going to use this quite a bit. So for those that do quite a few road trips, this offer is an incredibly sweet offer. But an offer like this also suggests that demand is slowing a little bit, perhaps in the US, or that there might be another price cut. Later in the future, I expect many more price cuts, so that does not concern me because all of that is already built into my model. But this could also suggest that Tesla looked at their order inflow and realized that, oh, maybe we don't need to do a promotion this time. We'll just do nothing because we have a lot of orders coming in. So this in a way could also be positive, but my guess is probably the offer is going to come back, but just maybe a little bit later. But Tesla does all kinds of offers like this all the time. And also let's remember that Tesla reduced the referral discount. So maybe Tesla is just trying to find out different ways to package that referral discount. Instead of just giving people straight up cash, we'll just give them free supercharging. And maybe the free supercharging sounds better. So I finished recording, I'm editing the video, and before I publish the video, I usually check for any breaking news, and turns out there is breaking news. Tesla has removed the $250 referral discount the buyer gets. Instead, you now get 3 months of supercharging, but only for the Model 3 and the Y. Model S's and X's only get FSD for free for 3 months, which maybe in some ways is actually a better deal, especially if you don't go on road trips. The referral still gets 10,000 credits no matter what new vehicle the buyer chooses. All right, so overall, I say this is good news in terms of potential demand. This doesn't seem like anything bad. It doesn't seem like anything good either. Just Tesla trying different ways to incentivize people and see what works best. My guess is that 6 months of free supercharging, because most people do not go on road trips. My guess is for Tesla, it'll actually be cheaper to deliver on the 6 free months than just give people $250 off. I think overall it's cheaper for Tesla to do it this way. I'm not entirely sure. This is just my guess. Unless instead of charging at home, people decide to start supercharging because they have free supercharging. Then it's gonna cost Tesla a lot more than $250. James says that his buddy saw this in a Chicago Tesla service center, and while that's great and all, the person needs to be in the Tesla service center to see it. Why not use this message on print media outside the Tesla service center? This basically shows that the estimated total cost of ownership per mile after 5 years or 60,000 miles is 37 cents per mile compared to Toyota's RAV4 of 57 cents or Honda CR-V, which stands at 60 cents, and then BMW X3, which stands at $1.04. One question though that I get asked when some of my friends want to buy an electric vehicle, they look at the Tesla rear-wheel drive and they say, but we have snow here, so there's no way a rear-wheel drive car is going to be fine here. And then they don't even think about it. They just want the all-wheel drive version, but the all-wheel drive version is more expensive, so they're not really that interested. But from my personal testing, I would actually prefer an electric vehicle that's rear-wheel drive, especially if it's a Tesla, because that's what I specifically tested, in snow, over an all-wheel drive gasoline-powered vehicle. I actually found it to be safer to drive an electric rear-wheel drive vehicle in snow than a gasoline-powered all-wheel drive vehicle. You just have more control. It's instant how Tesla delivers the power to the wheels. I just found it to be easier to drive and control the vehicle. And when the vehicle starts sliding a little bit, it corrects itself pretty much immediately, and not really the case with a gas-powered car. But I think it's something really difficult to actually understand, because I explained that to my friends and they still went, no, I'm not sure. It still sounds a bit dangerous, and they just didn't get a Tesla. And I was really skeptical too until I actually tried the vehicle myself in the snow. I tried really hard to spin out, lose control. It just didn't happen. But I was actually able to sort of lose control of an all-wheel drive gasoline vehicle. I was driving a Mercedes sedan. Starship could launch in as little as 1 week. Wow. It's a really big rocket, and yeah, the last time did not go well. It was still a success overall because, I mean, it took off. Oh, there's another one. Ford's joint battery cell plant in Turkey is scrapped. Volkswagen is doing things like this, and now Ford is following Volkswagen. They are basically blaming low demand and low EV adoption. But if we look at global battery electric vehicle sales, we see that they are clearly growing. But what is not growing is demand for electric vehicles. These EVs actually need to be good. Volkswagen prepares, according to a media report in a supervisory board meeting next week, to decide to lay off 20,000 employees. The end of the legacy automakers is beginning right now as we speak. Supposedly, the planned sustainable increase in performance of 10 billion euros by 2026 is to be achieved with reduced fixed and production costs, cross-divisional performance improvements, and optimized product and material costs. And if even just under a third of the savings are to be realized through cuts in personnel costs, the figure of 20,000 is still far too low. Expect to start seeing a lot more of this. And the car dealership guy here says that he hasn't seen numbers like this in a while. This is $10,000 off at the largest Chevy dealer in the country for this vehicle. If their EV sales start suffering even more, well, they sort of expect that. But if their gas-powered vehicle sales also start suffering, now that's really going to hurt them. And it's just a matter of time before that happens, because everyone is going to transition to EVs. And you know, some automakers choose to spend their time on building these ridiculously expensive EVs, like this Cadillac EV that costs $400,000. That doesn't seem like a winning strategy to me. Giga Texas is getting longer by about 400 feet. Polestar has unveiled the Polestar 5 EV. I like it from the front. I think it looks pretty good here. The back though, I am not so sure about. Yeah, I don't think I'm a fan of the back. Jeff took some of his time to correct this article from Automotive News. The article says EV share hit 7.4% in the US through Q3 despite demand worries. Registration data shows Tesla has the majority of the electric segment, but Hyundai, BMW, and Mercedes-Benz grew faster. This is where the correction comes in. Into ballooning inventory, not so through. Yeah, these automakers, they just sell to dealers, and these cars then sit on the parking lots, and the Mercedes brand especially has a huge problem with high inventory right now. Joe Tag Buyer has heard that there are well over 30 Cybertrucks stored inside as well. This is on top of the quite a few Cybertrucks seen yesterday outside. That's just a rumor, of course, but it does seem very plausible to me. I think it is very unlikely that the delivery event would be delayed. The Cybertruck is actually coming, I think. Here's someone that says, I was told that the second 9,000-ton Giga press for the Cybertruck will be ramped up by Q1 in order to have one machine dedicated to rear castings and one to front castings. It seems that the ramp is going well. This is a comparison between November 8th and November 10th. Yeah, there are a lot of castings that Tesla is producing. Remember that research note that supposedly made Tesla stock go down by 6% together with the comment from our president that said that Tesla workers should unionize? Well, Gary Black now got his hands on that report, and he has broken it down. Gary says that HSBC Tesla report that carries a reduced rating and a $146 price target relies on classic reversion to the mean analysis and seems more like how one would value a slow growth legacy auto company than a high growth tech stock like Tesla. In other words, if Tesla stopped growing, then yeah, $146, maybe not too crazy, but Tesla is still growing, and it is gonna grow in the future a lot. The research team uses two common approaches, DCF and multiples based, to derive the $146 valuation. The DCF approach presumes huge Tesla EV share losses between 2023 and 2030, a 30% average selling price reduction over the same period, and most critically, a 2.5% terminal earnings growth rate assumption. This leads to a $201 share DCF-based valuation. That's a bit low. The multiples approach produces a $92 share valuation and is based on 2023 and 2024 EBITDA and EPS, way too short term, and applies magnificent 6 multiples to each. This fails to capture the super growth expected by most Tesla investors as global EV adoption accelerates and Tesla TAM, total addressable market, doubles from Cybertruck and the $25,000 vehicle, which both produced the vast majority of their value after 2024. HSBC weights the DCF and multiple-based approaches at 50-50 to produce a Tesla base case valuation of $146 per share. Let's start with the discounted cash flow approach first. The HSBC research team commits what I consider to be 3 fatal mistakes in their Tesla analysis. Number 1, They assume that Tesla volume grows from 1.8 million in 2023 to just 5.9 million in 2030, which would only be 18% compounded annual growth. So less than the EV adoption itself, which doesn't really make much sense unless you think that Tesla will just throw its hands up in the air and will just give up and not even really try anymore. That's not going to happen, by the way. Tesla will grow and Tesla will be focused on EVs. Gary says that he assumes the EV adoption will grow from 12% now to 60% by 2030, which would be 26% annually, basically. My 2030 volume estimate is 10.2 million, and it assumes 60% EV adoption and a 20% Tesla EV share. Number 2, HSBC assumes average selling price, including regular credits, falls from $45,500 in 2023 to about $32,000 in 2030, so a 30% decline. Even though Cybertruck will raise the average selling price once it scales. Now, Gary's assumption is that in 2030, the average selling price will be $47,500 versus $45,600 today. So he thinks it will actually increase. Now, if Tesla only delivers not many vehicles, then yeah, I can see that happening. But assuming that Tesla actually delivers quite a few more vehicles, knowing that Tesla is focused on transitioning the whole world to sustainable energy, I think the average selling price will actually go down substantially. I do have it in my model on Patreon if you'd like to take a look. I think Gary's number is not going to be very accurate. But also his delivery expectations are not that high. But to expect an average selling price of $32,000 in 2030, I think that's just ridiculous. If you think that Tesla will only sell 5.9 million vehicles. Mistake number 3, randomly assumes a terminal growth rate of 2.5%, which implies a terminal free cash flow multiple of 13. Which is less than the S&P 500 free cash flow multiple. Now, do you think that Tesla, in terms of innovation and growth, is a bit above the average? I think it is. So, but you're giving it numbers that are below average. That doesn't really make sense to me. Gary continues and says, my terminal multiple is 30x. And assumes forward EPS growth of 20%. These 3 assumptions lead to an EV-only valuation of $78 per share. HSBC adds energy and storage and services to get to $114 per share. HSBC then gives credit to FSD, Dojo, and Optimus, which produces another $307 billion in valuation to get to a total DCF valuation of $711 billion or $201 per share. Yeah, the deeper I look into this, the more questions I have for HSBC because your math just doesn't make sense. And then there's the multiples approach. So HSBC's Tesla PE and EV EBITDA analysis is based on Magnificent 6, excluding Tesla multiples, which are all growing slower than Tesla. So these companies would include companies like Apple, Microsoft, Alphabet, which is Google, Meta, which is Facebook, and a few more. HSBC uses 2023 and 2024 GAAP EPS and EBITDA to value Tesla on multiples, which seems way too short since it doesn't capture Cybertruck ramp or the $25,000 vehicle, which will essentially double Tesla's total addressable market, with the bulk of their value creation after 2024. So you're valuing a company looking just slightly ahead. Yeah, and that's how you got your price target, 50% of it, basically. This just makes no sense. Why would you do that? We obviously know that Tesla is working on the next generation vehicle, that Tesla is going to release more models in the future, the total addressable market is going to expand, is going to explode, and yet you're choosing to ignore all of that? That makes no sense to me at all. Now, the multiple-based approach does not include FSD, licensing, Dojo, or Optimus. Okay, I can understand that, but you only look just slightly ahead, which does not make sense to me at all. And that approach produces a Tesla valuation of $92. This analysis from HSBC is just stunningly bad. I mean, in a way, I'm sort of happy because this gives us a buying opportunity. And clearly their numbers are, I don't know what they were thinking. using the multiples-based approach, you're not looking ahead almost at all? What? It's like they were thinking of ways. Okay. We want to be, our Tesla stock price target needs to be under where it is. How can we twist our analysis and approach in a way that will produce a Tesla stock price target that will be significantly below where Tesla stock is trading today? The multiples approach and not looking ahead is what we are going to do. Is probably what HSBC decided here. Reading through the 108-page report, which has many useful charts, is almost as if the research team had a preordained answer they wanted to get to, a reduced rating, and build their analysis to fit their desired conclusions. So it's not just me thinking that their analysis is heavily tilted towards one direction. Gary Black also has the same opinion too. In my honest opinion, experienced growth investors will see through the flawed analysis and quickly realize that valuing a high growth company like Tesla using classic reversion to the mean techniques makes little sense. A big shout out goes to Gary Black for sitting through that 108-page report that was pretty clearly quite biased. But I do like looking at other people's research that is bearish, because I want to make sure that I don't have any blind spots. And after looking at this research, oh yeah, I feel really good.
A movie based on your book is in the works. So which actor would you like to see play Elon Musk?
Well, the good thing is to have Darren Aronofsky as the director. I mean, this book is about somebody who's accomplished amazing things, but has many psychological depths. So he's the director to do it. I know they're kicking around a lot of actors. I'm not a Hollywood person, so I'm not sure. I love Benedict Cumberbatch in The Imitation Game, but that might not be the right person. But he's, a smart actor. You want somebody who can be smart and psychologically deep.
That's the actor he's talking about. He's a pretty good actor. I watched this movie before. I really liked it.
Your take on Elon Musk. Do you trust him?
He's been able to make rocket ships that can get people to orbit, which NASA and Boeing can't do, and re-land. And now with Twitter, what he's calling X, he's able to embed artificial intelligence, this new AI thing. So I think he does great things, but he also can be impulsive and reckless, as you see in the book. And I think it's good that there's some guardrails that try to keep him from having too much wildness infested in his things. And I do think that he has opened up Twitter to more free speech, but that's always a balancing act.
Actually, personally, I feel a bit more bold and overall better because Twitter/X is here in this regard, in this capacity where it's quite difficult to be banned if you are generally just trying to get down to what's the truth. And as long as you're not calling for violence, I think you're pretty good. You are not going to get banned on X. But before Elon took over Twitter, my thinking was, what if I say something and I get kicked out of YouTube? It's going to be it. But yeah, well, I'm not really thinking like that. I'm just thinking, oh, okay, if it happens, then I'm just going to move over to X. So this actually allows me to be more bold on YouTube. And for that, I would like to thank Elon Musk.
Scientists and AI engineers, Mr. Isaacson, are worried that next year, 2024, is when AI deepfakers are going to be indistinguishable from reality right in the middle of the 2024 race. They're predicting deepfake images and false campaign ads are going to come up next year. You think Elon Musk is all over this? He's going to stop that?
I do think that's a worry because AI has been able to do deep fakes, videos. And we used to say, trust your own eyes. It's going to be a little hard to do that. I've been using Grok, and it's really funny. It also has great taste. I asked it who did the best renditions of Summertime. And of course it does Louis Armstrong and Ella Fitzgerald, but then got Janis Joplin second. So I'm thinking, okay, this is a really interesting product. But what happens when you ask it political questions? It seems pretty good at the moment, but somebody could deploy AI to spread more misinformation. And I know you say free speech drives out misinformation, Yeah, sometimes it does, and we all love free speech, but I think we have to be on guard against huge amounts of trolls and bots using AI tools to spread misinformation.
Yeah, these deepfakes are getting good. Some of them disturbingly good. Look at this. This is just some person that tried to learn how to do deepfakes on a side. It's not his main thing.
Here's a montage of me living another life as a movie star.
This is Sparta!
I see dead people.
See who's behind the mask. I can look into your eyes as you die. Peace. It can't be.
Yeah, some of these are getting really good. Just imagine what would happen if someone dedicated his whole life to learning how to do this. Then you really couldn't tell a difference at all. And really, it's just a matter of time before it actually happens. But my thinking is more like, well, before we had cameras, when someone told you something, you didn't have proof that it actually happened. You just took someone's word for it. And a lot of these would be lies. So in my thinking, we are sort of just going back to the norm of what was normal before we had cameras and pictures. It was a messy world, and the world is gonna get really messy again. And YouTube says you should watch this video next, but if you haven't finished watching this video yet, watch this one first. My name is Matt Pochius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.